In this video, I am going to give you my step-by-step plan on how I'm going to turn $6,000 into $130,000 step-by-step by investing into Optimism. Their ticker is OP, which is a layer 2 scaling solution. So before I get into this video, I do have to say this video should not be taken as financial advice. Please consult your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research, but use this channel as a starting point. So in this video, I'm gonna give you a breakdown as to what Optimism is and how their optimistic rollups are solving a huge problem in the crypto world and helping ETH to scale. Talk a little bit about how optimistic rollups are different from ZK rollups. We're gonna go through the tokenomics of OP. I'm gonna show you my exact step-by-step profit-taking strategy that you can literally follow. And then at the end, I'm gonna show you my yield farming strategy so I can accumulate as much OP as I can so that I will have more to sell. So without further ado, let's get into the content. And just so y'all know, this is an OP shirt I got from ETH Denver, not that anyone cares. It says Optimism in the back. I work from home, so wearing these YouTube videos gives me a chance to wear my shirt. So you guys are the only people I can show it off to. So let's get into the content. So before I explain what Optimism is, I gotta explain the problem first. So Optimism is aiming to scale Ethereum, and every single layer 1 blockchain has what's called the blockchain trilemma that they have to get over to increase their scalability. The blockchain trilemma is decentralization, security, and speed. You have to pick two. Bitcoin is famously optimized for security and decentralization, as well as ETH. And Solana is optimized for speed and security, and they're not that decentralized. So every chain has their own thing that they're optimized for where they're lacking in something. So what I mean by scalability is what's called transactions per second. Visa can handle like 60,000 transactions per second. Bitcoin can handle like 7. I think Ethereum right now can handle 14 last time I checked. So they're trying to increase that. So basically what you need to know is, and I made a great video on this, there's 3 parts to a blockchain. You have the consensus layer that says what's true, and that is the consensus mechanism. On Ethereum, that's proof of stake. On Bitcoin, that's proof of work. You have the data layer, which is storage. And that's why, you're hearing about all of these shards, which are like parallel blockchains being built next to the chain so that all the data is stored, so it's not having to be stored on the mainnet. Then you have execution, which is like computational finality, and that's where the transaction is processed. So right now, all 3 of those things are happening on the mainnet, and it's clogging up block space because any blockchain is in the business of selling blocks. Just like airplanes are in the business of selling seats. It's only so many people that can fit in each block, just like it's only so many people that can fit in an airplane or a train. So by having shards or data on another chain, and then by having execution on layer 2s, it helps free up space in each block so that Ethereum can scale, handle more transactions per second. So Optimism is a layer 2 solution, and they're aiming to help Ethereum scale by allowing applications to be built on Optimism, and then so they can submit them to the main chain and help Ethereum scale, like I said. So now let's kind of dive into Optimism a little bit more and what they're doing and how they work. So the reason why they're called rollups, so you have ZK rollups and optimistic rollups. They both do the same thing, but they go about it in a different way. And the reason why they call it rollups is because they roll up transactions and they submit it to a chain. But better yet, more so than just rolling them up, they roll them up and then they compress them. And when you compress something, if you ever got an email with a compressed folder, you know that the megabytes or the data amount is smaller, and then you open it and you get access to everything. It's the same thing with blockchains. They roll them up, they compress them so that way when they submit them to the mainnet, it's less memory needed, aka more transactions are able to fit in each block. So just to give you a quick idea as to what's different between optimistic rollups and zero knowledge proofs, or aka ZK rollups, is optimistic rollups verifies the transaction after, while ZK rollups verifies the transaction immediately without knowledge, hence the name. However, there are trade-offs. ZK rollups is a newer technology and is less battle tested. It is also computationally more strenuous. While optimistic rollups take a longer time to verify, but they're computationally less complex. And this results in layer 2 nodes having way less hardware requirements. Another thing to keep in mind is that EVM, aka Ethereum Virtual Machine compatibility, is much simpler on optimistic rollups versus ZK rollups, and that's probably why Vitalik Buterin likes optimistic rollups more than ZK rollups, if I had to guess. So these rollups don't have to worry about consensus or data availability, as it submits multiple transactions in the smallest packet of data possible. Like I said, it compresses it. So how optimistic rollups go about it different is there is a challenge period. So like, let's say you do a transaction, I forget the actual amount of days that there is. And this is also why it takes forever to use the native OP bridge, because of the same reason. It's a couple of days. It might be 11, correct me if I'm wrong, but like, let's say it's 11 days. The transaction goes through, you have 11 days to challenge it. If after 11 days no one challenges it, then the transaction is legitimate and it becomes final. And that's why they call it optimistic rollups, because they're optimistic that all transactions are legit until proven later. So it allows for cheaper fees, faster transactions, and just overall better scalability and a better user experience. And we need a better user experience if we want to onboard the next few billion people into Web3 technology. So now that we covered kind of what Optimism is, let's start to look at some metrics and continue to build the case as to why I think they're a good investment. So if we go to DeFi Llama and you look at all of the chains, you can see Optimism is number 8 in terms of TVL. They have 854 million locked on the chain, and they have over 200 protocols built on top of it. All right. So you can see that, and another reason why this is a good thing is because they already did an airdrop. And normally, or I'm not going to say normally, a lot of times after a project does an airdrop, the token will release after because people were just airdrop farming. But you can see that the TVL has been increasing, while in a lot of protocols, it's been decreasing. Another important thing to point out, if we go back to chains and we scroll down to Base, you can see that Base has 444 million in total value locked. So 444, make a wish, that's a good luck number. The important thing about this is that Base is built on Optimism. So while Optimism has, 800 something million, whatever it was, and Base has 444, you could say that Optimism has $1.3 billion locked on it, but they don't include Base because they're like their own thing, but they're still built on Optimism. So that's another thing to think about. And Coinbase, like back in the day, people used to say, no one ever got fired from buying IBM. Coinbase is kind of stepping into their role within Web3. So given that Coinbase decided to build on Base versus all the other layer 2s, Matic, Arbitrum, you name it, ZK Sync, that says a lot about Optimism and their technology and their belief in them. And I wouldn't be surprised if a lot of other projects that, go mainstream and become big in the future decide to build on Optimism just because Coinbase did. All right, now let's start to look at these tokenomics. So you can see that the market cap right now is $2.3 billion, okay? You have a fully diluted valuation of 10.8 billion. So that means that there's another 8 billion or so that still has to come onto the market. So we need to figure out when that's coming on, because that's going to play a part in our buying and our selling, right? Because this is all supply and demand at the end of the day. So it shows the allocation. You had 25% go to the ecosystem fund. You had 19% included in the airdrop, which I got, and hopefully you got if you watch my channel, because I did call it out. 19% went to the core contributors, 17% went to investors, and 20% went to RPGF. I'm not sure what RPGF is. This is the supply schedule. So I'm recording this video on, December 21st. So the next unlock is going to happen January 6th, 2024. So what I like to do is when there's an unlock happening, like I like to call it intelligent dollar cost averaging. I don't just like buy at a certain time all the time. Sometimes I do, but for projects like this, I like to give some time after some tokens are released onto the market and then buy after that, because a lot of times what will happen is the tokens will get unlocked. The people who unlock them, they've been holding these tokens for months, sometimes years. So they want to realize some profits. So they're going to sell them, and that brings the price down. So I want to buy the dip because I'm still of the belief that in this next bull market, OP is going to pump hard AF. So now that we went over that, let's go over my take profit strategy and show you step by step how I plan on turning $6,000, conservatively speaking, into $130,000. Okay, so like coming back to this, You see right now the market cap is 2.3 billion. Now, I personally think that the market cap can get up to 30 billion in this next bull market minimum. So from current prices, that's a 13x. Okay. Now, when I originally created my profit taking strategy, Optimism was a little bit lower. So keep that in mind when I go to show you these numbers. I'm already in profit a little bit. But the important thing is, a lot of people look at something and go, oh, it can 13x, it can 20x, and they try to get the whole 20x. But anything can happen. Like, interest rates are still high. It's a lot of factors at play. Optimism can crash. Coinbase can change their mind. Like, someone on the team could pass away. Like, you literally never know what can happen. So that's why you always want to have a plan to know exactly where you're going to get out before you even get in. Okay. So why do I think that Optimism can go to a $30 billion market cap? Well, to do that, you have to compare them with their competitors. And hey, don't judge me. I'm old school. Yes, I wrote this down and took a picture. Yes, I did. But bear with me. This is good stuff here. Might be one of the most important videos you ever watch. And you should do this with every project you buy. So you want to compare it to its competitors. So I compared it with all of the layer ones as well as all the layer twos. Now, let me explain why I compared it with the layer ones. Like I said, all these layer ones have the blockchain trilemma to deal with. So I just told you that the layer twos are going to be where all of the applications are being built. That means that's where retail is going to be, using these applications. So I feel like in the future, more applications are going to be built on layer twos versus layer ones. They're just going to use the layer ones to come to a consensus and to have the security aspect. And on top of that, I feel like layer twos is going to be a huge narrative in this next bull market. Like, look at all the partnerships that Matic has. Look at all the applications being built on layer twos within this bear market. So those are the two reasons why I'm comparing it with layer twos and layer one. So if we look at this, Polkadot reached a $56 billion market cap. Cardano in the last bull market reached a $94 billion market cap. Solana reached $75 billion. Phantom reached $8 billion. Avalanche reached $30 billion. Cosmos 12, Near 12, Ethereum 560 billion, Tezos 7 billion. Matic reached 19 billion, Scale reached 1 billion, Loopring 4 billion, Midas 673 million, Mantle 1.7 billion, and Immutable 1.7 billion. Okay, so I took somewhat of the average of those, but another thing why I think Optimism can reach $30 billion is because I believe this next bull market is going to be fueled by institutions. It's going to be more. Like, this might be the craziest bull market that we'll ever experience, because once institutions get in and they start buying, they have a long-term time preference and they hold assets for 10, 20, 30 years. Not like retail buyers, well, we'll sell something if we want to buy a car or put our kid through college or save for a rainy day. These large funds are managing money for people, and they don't do that. And a lot of times they have lockup periods to where people can't pull out even if they wanted to. I run a hedge fund, and I require all my investors to lock their money up for a year and a half. All right, so now this is my exact taken profit plan. And again, I wrote it on paper. Don't judge me. So I believe that OP will hit a $30 billion market cap. Right now I have 6,000, or at least at the time of creating this is right before I bought it. I put $6,770 in this, okay? My first take profit is going to be after they do a 3x, right? After they do a 3x, the price is going to be $5.22. There'll be a $4.5 billion market cap, and my $6,770 will turn into $20,310. From that 20K, I'm pulling out 4K. So I got 4K in profits. Now I have $16,310 left. My next take profit after that is going to be when they do another 3x. That'll bring the price to $15.66. That'll bring the market cap to $13.5 billion. And then my 16K will now be worth $48,930. At that point, I'm taking $10,000 in profit. So now I have 14K in profits over here. So now I'll have $38,930 left. My third take profit will be once they do another 3x. And that'll be, and again, I feel like this $30 billion is conservative. I really feel like they can reach 50. But my next take profit is going to be when they reach a $40.5 billion market cap. And obviously, if I'm looking at my charts and I feel like momentum is stalling, I may take it out. But at least I have a plan for if it's constantly going up. and I have a mental plan for if it's not. But at least I'll, be playing with house money at this point. Like I said, I only put in $6,000. At this point, I didn't already doubled my money. All right. So if that happens, my 38K will be worth $116,790. At that point, I would take out $66,000 in profits, and then I'll have $50,790. 50,000 plus 80,000 is the number I said in the beginning of the video, $130,000. At that point, every time they increase 25%, because I feel like it could be getting to the top at that point, and I'll adjust, but every time it increases 25%, I'm taking 25% in profits. So that way, no matter how much it keeps going up and up and up, I'm taking some off the table, off the table, off the table. And hey, if it takes a shit after that, hey, I rode that baby good and I got some good profits out of it. So to make this easier, I like to put the lines on my chart. So first I got my chart marked up. You can see it's been trending upwards since, June of 2022. Didn't think it was that long. It's been trending upwards. But what you do to make this easy, because, once market mania gets bullish, you don't want to not have a plan and be like, oh, it'll keep going up, it'll keep going up. That happened to me and a lot of people I know last bull market. And that's why, we didn't make as much money as we should have. But I'm going to make sure that doesn't happen again this time. I want to make sure that doesn't happen to you as well. Learn from my mistakes so that you don't have to make them. So all of those take profit levels that I told you, I have them outlined here in these purple lines. So all I have to do, or you can set a limit order as well, but I use yield farming strategies, and we're going to get to that here in a bit. But all you have to do is, hey, once the market hits my line, take my profits that I wrote down. Once it hits the line, take the profits that I wrote down. When it hits the line, I'm taking the profits that I wrote down. You don't even have to think about it, and just follow your plan. Don't be like, oh, it'll keep going up, because you don't know that. You cannot time the top. You can a few times, but if you try to do that along an extended period of time, that's how you lose money. It's not a sustainable model. Have your plan and stick to it. And when you're making your plan, listen to your emotions. It's generally two types of investors: people who like to make larger amounts of profit less frequently, and people who like to make smaller amounts of profit more frequently. If you are a person who is impulsive and you feel like you can't wait, you're probably of the person who likes to have smaller amounts of profits more frequently. If you're like me and you're more patient and you're a swing trader, which is like what I like to call myself, or a value investor like Warren Buffett, you like large amounts of profit less frequently. And I always say the best investment strategy is the one that matches your personality. There's multiple ways to skin a cat, and if you read the book Market Wizards, you'll see that one guy's strategy and how he made billions, another guy, when he's talking about that strategy, that's on his list of things he would never do. All right. So it's like you have Warren Buffett, who got extremely rich off of value investing and just buying and holding. And then you have people like Jim Simons, who got extremely rich, both billionaires, from taking small amounts of profits. Like he pretty much innovated the whole algorithmic trading, or helped. He has a book called The Man Who Solved the Markets. If you're interested in that story, I recommend you read it. You won't learn any strategies because he's very secretive, but nonetheless, it's still a good story. So now that we went over my take profit strategy, I'm going to show you how you can accumulate OP in a fairly low risk way and get some pretty high returns. And if you guys are interested in this kind of stuff, click the link in the description and book a free strategy session with one of our team members here at Know It Owls. Our Know It Owl Academy shows you how to do all this stuff that I'm showing you on the video. It shows you how to find farms, how to know which tokens you should yield farm for, how to develop your take profit strategy, how to figure out what kind of investor you are and create a strategy around your personality. All right. So if you're interested in that, click the link, book a free strategy session before this bull market happens so that we can help you get a plan together. So now let's go over my yield farming strategy. All right. So if you guys watch my channel for a while, you've heard me talk about concentrated liquidity. But for my beginners or first timers, it basically allows you to go on a decentralized exchange such as Uniswap and provide liquidity in the form of pairs. So you can go to the OP USDC pool or the OP ETH pool, which I'm about to get into, and say, hey, only use my liquidity when OP is trading in between $1.18 and $2.40, right? You can have as wide as you want, as narrow as you want. The wider your range, the lower your passive income, but also the lower your risk. The tighter your range, that gets flipped. The higher your rewards, but the higher your risk, because you have to worry about something that's called impermanent loss, because when it goes out of range to the upside, you miss out on price appreciation. When it goes out of range to the downside, you're pretty much limit order buying the loser. right? So if this goes, if OP goes down and it goes out of your range, you're in 100% OP. And if it goes up out of your range, you're in 100% USDC if you're in an OP USDC pool, right? And that's another thing we teach in our Know It All Academy. We're going to make you a technical analysis expert, because fundamental analysis shows you how to, research a project to determine if it's a good buy. But technical analysis, when you mix those two, it helps you master your entries and your exits so you can come up with a plan on when to buy and when to sell. Now, another thing you have to factor into play is risk-adjusted returns. If I think I can get a higher return holding ETH, then I'm going to do that, because ETH, it has that Lindy effect. It's a 500-something billion dollar market cap. Tons of protocols built on it. Tons of protocols exist to help it scale, such as Optimism, such as Arbitrum, such as Polygon. So if I think I can get a better return holding ETH, I'm going to hold ETH. So I want to look at how these projects compare to ETH. So I like to look at ratio charts such as OP ETH. If the chart's going up, that means OP is outperforming ETH. If it's going down, it means ETH is outperforming OP. All right, so I 100% think that OP is going to outperform ETH in this next bull market. ETH is already at a $500 billion market cap. So in order to double your money in ETH, it has to go to $1 trillion, which is not out of the cards. But OP is only a $2 billion market cap. In order to double, it only has to go to 4. All right. So what you want to do is set up tranches. If you have ETH and you want to if you have OP and you want to take profits in ETH, you can set ranges that says, hey, you see this number here on the side, all you do is copy it and paste that into UniV3, and we show you how to do that. You say, hey, use my liquidity from this price to this price. And you can set up multiple tranches. You can go one from here to here. You can go one from here to here. So as it's going through your ranges, you're making passive income whilst also taking profits. This stuff is crazy. Like, yield farming is the best way to generate passive income in the history of mankind, because we get to be market makers, just like the financial institutions in traditional finance. So what you want to do is, like, let's say I want to provide liquidity from, and this is actually like what I'm doing. If you want to copy the strategy, again, not financial advice, but my range for ETH OP is 0.000721 and 001182. So in between these green lines. So as long as price is in between these green lines, I'm making passive income. So how do you look at man, if I would have been in this for 90 days, 30 days, how would I have done? So you go on this website called buildermetrics.com, and I made a video on this with the CEO, Jake. So you go in here, and those numbers that I read off, you put the bottom one in the minimum, you put the maximum in the maximum. You can calculate how many days. I do 90. And then had you been in this pool for 90 days, you could have been making $62 a month. You could have been generating 76.28% APR. That's pretty good. You're getting paid in ETH and OP. You can take those ETH and OP rewards and sell them and wait for, the next unlock to happen and use that to buy the dip. You can use it to buy another project, or you can just hold it as dry powder to sit on the sidelines. Now, I also have another range that's tighter. I'll have a smaller amount in a tighter range. So, and I do that to, keep control of my risk management, because if I suffer impermanent loss, at least it's on a small amount, but I'm making a high amount of fees. So with that, I like to conclude this video. Guys, if you got value, I ask that you drop a comment, share it with a friend who likes OP, consider subscribing. Let me know what projects you guys want me to cover. I'm here to serve you guys. Let me know if this video was helpful. I know there's a lot of people who wish they made more money in the last bull market, and I feel like this video can help really put together your plan so that you can go into the bull market and be like, okay, I'll probably make around this amount of money versus, oh, this coin will probably 10, 20, 30x and I might make this. Have your plan and stick to it, guys. So with that, I thank you guys for tuning in. I love every single one of you, and I'll see you guys in the next video. Take care and trade safe.